Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in Accounting. And our topic today is adjusting interest receivable. What is this? Let's consider that we have a promissory note. By the way, we have a video about this, and the video is in our video description. It was issued in February. It was received in August. Nothing to be done. We will record the interest income when we receive it. No problem. However, what if we issue it in October and we will receive it in February, this other fiscal year? We need to recognize the interest receivable from the date we issue it until the end of the fiscal year, usually December 31st. So we need to record this income. And this is our topic today. And by the way, guys, subscribe to our channel. You will be the first one to know when a new video arrives. So, interest earned but not yet received is called accrued interest income. So, interest receivable, we will debit increases, credit decreases, just like any other receivable. Interest income, it is a revenue. So, credit increases, debit decreases. Let's see how it works. Let's go to our Excel file. And the Excel files, they are free, and the link to download it is in our video description. So here, October 1st, accept a 120 days, 8% note from Skinner College for an extension of time of its account, $2,578.35. Note receivable number 6. October 1st, 120 days. October, November, December. January, we will receive it on February 1st or January 31st, the next fiscal year. So, okay, let's do the first one. Let's record this note receivable. So we are moving from accounts receivable to notes receivable. So notes receivable, document number, note receivable number 6, debit 2,578, and credit accounts receivable the same. So here our accounts receivable, we close it because we are transferring to notes receivable. Accounts for these customers, Skinner College, we reduce our global accounts receivable and we open a notes receivable. Good. However, what do we do with the interest? So interest income, how much it is? 120 days or for a month. We can do it based on month, or let's do it based on days. How much is our total interest income? So here, it's interest income. Total. It is 2,578.35 times 8% divided by 360 days times 120. So the total is 68.76. Until December 31st. It is the total divided by 120 times October 30 days, November 30 days, December 30 days, times 90. 51, and then January 22, January 22. See how cool it is? If you add single quote, you can type it and Excel will assume it is a text. So January 2022, it is the remaining. So it is the 17. So now we are recognizing this one until December 31st. So our interest income here is $50. 51. What is our journal entry? So here, adjusting entry, December 31st, just like any other adjusting entry. We don't go to notes receivable. It is interest receivable 51. And here, interest income, the 51. And usually we have no special journals for interest receivable or interest income. Easy, huh? But tricky. So watch this video how many times you want and share it, please. So guys, questions or comments, leave it here or email me at jscarpin@gmail.com. Thank you so much for watching this video. Have a very nice day and God bless you.